We can start.
Okay. Hi everyone. Thank you very much for having me. My name is Letort. I'm the Director of Strategic Initiatives at Digital Asset. So thanks to IntellectEU for allowing me to present Canton Network today. Canton Network is a blockchain network really dedicated to financial institutions. And quick history, we announced Canton Network this year in May with 30 partners. Digital Asset is a tech provider, but it's a collective of strategic partners that have developed Canton Network, IntellectEU being one of them. I want to highlight a few names that are part of this collective. A few banks, Goldman Sachs, HSBC, BNP on the bank side, a few exchanges, Deutsche Börse, Sibos2023 for instance, or a few tech providers such as Equilend or Microsoft for instance. This is really something we announced this year, but that we've been working on for several years together with these partners. We decided to follow kind of an unusual path, I would say. Some blockchain publish a white paper and say they are live. We worked kind of 5 years to build application together with clients like Goldman Sachs and partners like IntellectEU. And once we had this application developed, scaled up in production, we started to realize we kind of had sub-networks. And our clients wanted to connect to multiple applications together, which is when we said, okay, it is time to bridge the gap between these sub-networks and launch Canton Networks. This is why you're going to see on the next slide, we are already with very significant adoption and volumes. So if we look at the adoption in terms of the bank side, as of today, 9 of the 10 largest banks are already connected, either directly or indirectly, to Canton Network. In terms of volumes, we are already trading over 1 trillion a month of notional on Canton Network. Our biggest application is run by Broadridge on a product for US Treasury repo, for instance. And if we look at a different asset class, if you look at syndicated loans, one partner, Versana, is running post-trade services for syndicated loans on Canton. And Versana is a consortium initially from JP Morgan, Citibank, and Bank of America, who has been joined now with, I think, 5 other banks, Morgan Stanley, Wells Fargo, UBS Credit Suisse. And this group of banks represent over 50% market share of the syndicated loan market. So because we took the step of first building the apps, now that we're launching the network, as you can see, we have a very good market share and volumes already. I think in terms of volumes, we are twice more active than any crypto token. So that's kind of the business arguments of the strengths of Canton. Now if you look on the right side, you can see like more the technical specificities and features of Canton Network. The reason why we started to work with financial institutions is because they require some specific features. First of all, they need to be in control of their application. It's really difficult for a regulated institution to say, oh, I don't really know who's validating my transaction. Depending on the jurisdiction, the rules may vary, but overall, they need to be able to say, oh yeah, I know that the people validating the transaction are this list of people. So when you build an application on Canton, you are able to define the list of validators of your transaction. So it means you have control of your application. This is a key differentiating factor, and this is why regulated institutions choose to work with us. It's not because you have this sovereignty that you lose something that is very important, which is composability or interoperability between applications. Sometimes the way to be sovereign is to be completely closed ecosystem. We have a protocol that allows to keep the privacy and sovereignty while allowing composability between applications. So if we take an example, if we have an asset issued on one of the tokenization platforms, for instance on Goldman Sachs DAP, you could take that asset and use it as an underlying for, let's say, a repo trade on the Broadridge application. Even though Goldman and Broadridge are completely in control of their application, similarly to the Web2 world when you can have API that are public, on Canton you can make some smart contract available to others, provided that you accept this other application to connect to your smart contract. So that's the second key feature. The third feature is linked to the way we design our consensus mechanism. In some chains where you have like a full replication of the blockchain across every node, you have two consequences. Everybody has access to the information, meaning that the data is public. And secondly, the data has to be replicated across all the nodes. We chose a different design for privacy and scalability reason. Our design is such that we have a data segmentation. The smart contract between a buyer and a seller and a custodian, let's say, is distributed on the nodes on the ledger of these three parties, but not the 100 other nodes that are not involved with that specific smart contract. That data segmentation of the information allows to have both privacy by design of the data segmentation, but also a better scalability, as you don't need to replicate the information across every node in the network. Last but not least, to access the Canton Network, you do that through like a single entry point, which is your own database, your own node, that connects you to multiple applications. It would not make sense to our clients to need to deploy multiple nodes to connect to multiple applications. From one single node, you get your data, your smart contract, from the various applications you're using on Canton Network. So in short, three key business argument and feature, and four key technical features that make Canton fairly unique. I'll go next to give some more details about the kind of applications that are currently running in production on Canton Network. This is a picture of the network from an application point of view. On the left side, you can see the application regarding asset tokenization in general, and I'll go a little in more details about what kind of assets are currently tokenized on Canton Network. To the right side, you see more like application related to the payment and cash systems. And in the middle, you have derivatives transactions that combine both the cash and the asset legs. In dark blue are the application in production, and in light blue are the application that's going to go in production in Q4 or Q1 next year. I think it's very unique to Canton to have so many applications in production with traditional financial institutions. We are not in the pilot phase. We've gone over that over the past few years. So if I dig a little deeper on the asset tokenization side, what kind of assets are being tokenized on Canton today? The bank partners, HSBC, Goldman, BNP, they started with securities such as bonds or funds, and are progressively adding more complex asset classes over the quarters. Some exchanges such as Deutsche Börse started with structured product in Germany, where I think they issue like 1,000 structured product on Canton on a daily basis. If we go lower here, we have the syndicated loan platform Versana that I mentioned earlier, with these very key investors in Versana and client in Versana, the largest US and European banks. I think that's very interesting. The benefit of using blockchain is particularly important when the asset is complex to issue and life cycle. The syndicated loan, I think Bank of America told us on the distribution of information side is still sometimes done through faxes. I think Bank of America is still sending hundreds of thousands of faxes a year to the syndicate members to communicate that a specific loan has been allocated to 50 or 100 syndicate members. The benefit is obviously immense when you move from faxes to smart contract. Like the efficiency is significant. I think the current settlement time or execution time for syndicated loans is roughly 20 days. Versana will help bring that down significantly. And that's really key to take a use case where your end client will have a significant benefit thanks to the technology. Conversely, if you take an asset class that is already very efficient, let's say US stock, because it's moving to T+1, okay, you can go from T+1 maybe to T0, but the benefit is limited. It's better to invest into an asset class when it's currently T+20. Similarly, we're working now with companies in the mortgage space where they take the single mortgage and moving that from current almost paper process to smart contract on chain. And same thing, we're talking to take a T+30 process to T+ a few days process. And this actually now went live in production like 2 weeks ago, so I could move that from light blue to dark blue. And as a consequence, now that single mortgages and single loans are on Canton, I think the next step for our partners is to look at the securitized market. The MBS market and the CLO market is a natural next step as the single asset have been moved to Canton. We also have Heliox that actually went into production a month ago. This is a natural gas physical contract tokenization platform. It's a consortium of 6 very large producers, Shell, Mercuria, etc. And here you're taking delivery of natural gas through pipelines. And this also was a T+30, T+60 process that is brought down to a few days. So very successful on the asset side. Now the key priority for the network and for our partners is to look at the payment side. Now that you have the asset side on Canton, the natural next step is to want to do like delivery versus payment, and having both legs of the DVP on chain is what will be key to allow what we call atomic settlement, the fact that both cash and asset succeed or fail in terms of transaction. On that, we are very proud to be part of 2 very key projects from the Regulated Liability Network, both in the UK and in the US. Canton is the tech provider to both consortiums. In the UK, it's a Bank of England and a dozen of banks in the UK pound. In the US, I think it's 15 banks and the Federal Reserve of New York working together to do not only tokenized bank deposits, but also allowing these different bank deposits to be fungible or interchangeable with each other, so that you don't have a fragmented cash market. You would have a consortium currently of 15 US banks, for instance, that will allow the various bank deposit to be settled through the Fed, kind of as a retail tokenized deposit and a wholesale tokenized deposit market, replicating the current 2-tier banking system that we have, except that by bringing it on blockchain, you will have a 24/7, 365 quasi-real-time settlements. So this is really exciting, and we've seen a few banks announcing at Sibos that they're moving forward on this domain of tokenized deposit, which I think is very useful for the blockchain adoption. Last, I want to finish with the derivatives piece and mention Broadridge and Equiland. Broadridge has built a very successful repo on blockchain platform, and they have now launched their product probably 2 or 3 years ago and scaled up to dozens of banking clients. They are trading over $1 trillion a month of notional, and the key appeal there is by moving the collateral management, the repo piece of locking the treasury on chain. They've unlocked significant operational efficiencies, and this gain in operational cost are what has been convincing their end client to move to Broadridge DLR. Similarly, Equiland recently launched a product for equity stock loan on chain, where the ledger will be the source of record for these equity stock loan transactions. That's why the product is called One Source, one single source of information for stock loan operations. And I think it's very interesting to see that you're moving from asset to payment to derivatives, which is kind of a natural way that the ecosystem is evolving. And that's kind of just a picture to illustrate this network of network concept. This is, let's say, a tokenized asset platform. This is a payment/digital cash platform. They're connected to each other through Canton Network. And here is the illustration of, let's say, a derivatives platform that's going to connect to these 2 other applications. These applications are sovereign, but composable and can interoperate thanks to the Canton Network ecosystem. That concludes my presentation. Thank you very much. Happy to take any questions.
Thank you. Very good speech.
Thank you.
Now I understand.
Good.
Yes.